Okay, we are still on itemized deductions. This time we're going to be talking about interest, which starts on page 5-11. And so the interest that you pay on certain items is going to be deductible. It's going to be this section right here, lines 10 through 15 on the itemized deductions, Schedule A. So let's take a look at what we've got. We've got home mortgage interest. We've got some points reserved for future use, and then investment interest. So home mortgage interest, so the interest that you pay on your mortgage is what's deductible. And as far as I know, it's deductible for your first mortgage and your second mortgage. However, home equity interest is no longer going to be deductible after this year. In fact, I don't even see the line for home equity interest anymore, which is kind of weird. But let's talk about our home mortgage interest. So we have, oh, and it also says points. We'll need to talk about that. Qualified residential mortgage interest is deductible, and as far as I know, it's deductible for your second home as well if you have a mountain house or a beach house or something like that, or a condo that you're paying a mortgage on. And this interest comes on your statement from your mortgage company, and that's what's going to be deductible, is only the interest that you've paid this year, that's been paid. Now, the mortgage needs to be, this is what's kind of weird. Your mortgage needs to be under $1 million in order for it to be deductible. If it's not, if the mortgage is over $1 million, then only the portion up to that $1 million is going to be deductible. So we would just do a percentage. If it was 1.5 million, then 2/3 of it is under the $1 million and 1/3 is over. So 1/3 of your interest would not be deductible, but the other 2/3 would be. I hope that makes sense. If you bought the house this year, then the points that you paid, points are basically buying down your mortgage interest rate. And if you paid points, which can be very beneficial to you, then those are going to be deductible as well. But only on the acquisition debt, only when you buy the house, not when you refinance. That's something to remember, not on a refinance. So let's see here. They're deductible in the year that they're paid. If you paid points, but you didn't see a dollar amount for that, which would be kind of weird. Sometimes the information that we're given though says, "Oh yeah, we paid 3 points." Okay, the way this works is it's the number of points times the 1% of the loan amount. Let me repeat that. You want to definitely write this down. The number of points times 1% of the loan amount it is your points. And so if you have a dollar amount, they're going to go in line 10. But if you don't have a dollar amount, that goes down here in line 12. And there are special rules for that, but that's how it works for line 12. If you're given a number of points, that's what you calculate. So definitely write that down. We also have home equity interest and consumer interest. However, consumer interest would be auto loans, credit card interest, things like that, bank account interest that you, or any other kind of interest that you might pay, not deductible. Up till now, home equity interest has been deductible as well. If you had a home equity loan or a second mortgage, that's been deductible. It no longer is. So that's something to keep in mind, or it no longer will be. I believe in 2017 it still was deductible. I'm pretty sure I deducted it, or at least on one tax return that I did. I'm trying to remember now. I'm pretty sure I did. So that limit, though, like how the mortgage interest on the first $1 million of mortgage for home equity loans for this year, it's on the first $100,000 of that second mortgage. So that's something to remember. Also, moving forward, qualified mortgage interest, the limit is going to move down from that $1 million. It's going to move down to $750,000. So anything over $750,000 wouldn't be deductible anymore. Any mortgage interest paid on a mortgage over $750,000. However, don't panic yet, because there's going to be anybody who had their mortgage before December 15th of 2017 is going to be grandfathered in. So you could have up to that $1 million. I don't know about you guys, but I don't have a mortgage of $1 million, so I don't really have to worry about this. But there are people who do. So if you know anybody whose mortgage is over the $750,000 up to $1 million, they can still deduct all of that interest as long as their mortgage was in place before December 15th, 2017. So that's adding some restrictions on this. Private mortgage insurance is also deductible. If you have it, you know. Otherwise, if you don't know if you have it, then you probably don't. One other thing, and that is investment interest. I don't know anything about any changes for investment interest, so I believe it's just going to be the same as it always has been, which means that your interest is deductible to the extent of investment income. So, or of net investment income. So when you have investment income, you can subtract out any expenses that you had having to do with those investments, and that creates your net investment income. So your investment interest expense on those investments is deductible to the extent of the net investment income. And there's a really good example on page 14 in your textbook. So I recommend that you go through that example. There's another example on page 15, the self-study problem number 3. That's a great one as well. So we're going to add all of our interest together, and that's your line 15. So try to remember what's deductible, what's not. Also on page 14, they talk about education loan interest, and I'm trying to think if there were any changes. I don't know of any changes in education loan interest. Let me peek in this. Yeah, I'm not seeing anything. Okay, so education loan interest, or your student loans, not deductible on this Schedule A. That's a better deduction. It's deductible over here on the first page of your 1040 form. I want to point out one more time, this educator expenses is not it. Educator expenses are only the expenses that teachers K through 12 can take based on the money that they spend on their classroom. K through 12 only, no preschool, no college. So just remember that it has nothing to do with this. Your student loan interest deduction is down here. There are some limitations on that. You're limited to $2,500 in interest, but it's phased out when your AGI, if you're single, reaches $65,000 to $80,000, or if you're married filing jointly, $135,000 to $165,000. I was trying to look one more time and see if I saw anything on that interest. I don't think there's anything else involved. So that's the end of the interest portion.